Hello friends, welcome again. This is SK Advisory Private Limited. This video is episode 6, continuation on the basic knowledge on chart patterns. In previous session we had analyzed two charts that were rising wedge and bullish expanding triangle. In this session we are going to analyze is bearish expanding triangle. It is a bearish reversal pattern in that price will be going up, then the expanding triangle will appear, signal or reversal to the downside. This chart pattern we see with this name because this describes the series of expanding price movement or a progressive increase involved. The logic behind this pattern as a reversal signal is the current market player is finalizing the trend, producing for now the drive. In the case of bearish expanding triangle, the current market player are the buyers since price is going up. So they will produce a graceful large price movement to finalize the trend, and after that sellers will end soon and the price will reverse direction. This how it's different than the wedge. The current market player is losing power. A way to trade bearish expanding triangle is to wait for price to break below the lower line to retrace back to this line tested as resistance. The stop should be above the highs high and a triangle, and the target should be at least 3 times as large as the stop loss size. This covers the reversal chart patterns. So now we will move on to the continuation chart patterns. We will start probably with the simplest continuation chart pattern, which is called bullish rectangle. We have a bullish and a bearish variant as begin with the bullish rectangle first. Remember that now we are talking about continuation patterns. So the signal where the price will resume its current direction after the pattern is confirmed. Rectangle happens when price begins softly sideways and resulting highs and lows, and it forms horizontal line that will make the pattern. Example, the shape rectangle. That's why the pattern named continuation pattern. The logic behind the continuation pattern is that price have been trending for a while. Now there is some consolidation happen since market it cannot keep always rising and falling forever. As you are beginner, we eventually notice that price is always oscillating these two modes to the trending or going sideways. Amongously, we will simplify this for the purpose of this video. This is the valid purpose. Proper way to trade a bullish rectangle pattern is to wait for price to break above the line that connects highs to be retraced back to that line tested as support. This is the optimal scenario. Of course, that doesn't always happen. Sometimes price breaks certain lines and just keep going. This can be a problem because you are an anxious trader. You try to chase price once it breaks the pattern that can hit badly. The logical stop loss is below the lowest 2 and 4 because the price breaks the upper line, and the upside it will usually come from a demand zone from 2 and 4, so you can count the help of buyers to protect your stop loss order. Tip: profit should be at least 3 times as large as stop. Remember that a continuation pattern implies the price standing, so you can take advantages of that. It's important to remember that there can be more highs and lows contained inside the rectangle. So the rest all charts we will discuss in our upcoming sessions. This information is helping you, then do like, share and subscribe to our channel and press the bell icon to be notified on every update from SK Advisories. Thank you.